Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again on the euro currency. As usual, so actually I have some doubts whether it really makes sense to prepare some technical update on the euro currency. But let's follow to the traditional, because to be honest, guys, nothing really has happened in the last week. Market shows so tight trading range and behaves so quiet, and brings nothing new to our technical analysis on this week. So I don't want to call about the monthly and weekly charts. So needless to say that everything stands as it was last week. On the daily chart, overall situation also looks a bit boring because we have the consolidation, but we do not have any hints on a possible direction, and we do not have any clear patterns even on the intraday charts that we could follow in the beginning of the week. So the major conclusion on the daily and intraday charts that we need to wait for a breakout. Let's see what really we could extract from the situation that we see on the charts right now. On the daily chart, we see two important moments. First of all, market is forming some kind of the flag shape pattern. This is definitely the consolidation, and this is definitely the contraction mode. So in contraction mode, market is building an energy. And it means that probably sooner rather than later, this energy should be released, and the breakout should happen. This is the first conclusion that we could make on the daily. Second, this moment we already have mentioned in the last week, that overall reaction on the strong daily resistance looks a bit muted. Because take a look, with this upward action, market hits the OP. This is confidence resistance. This was the daily rebound. Market has formed a reversal session, and all this stuff hasn't led market to complete even minor retracement. As we said, 1320 areas will be perfect because that is the confidence support on the 4-hour time frame chart, the former neckline, and take a look, that will be also monthly pivot point of the July that stands in the same area. At the same time, this consolidation doesn't cancel the chances on another swing down, so this is possible. Currently, market probably will work with the results of the J20 meeting. So the things that already become known, and one of them is the restarting of the negotiations between the United States and China on the tariffs problem. So the soap opera is continuing, and we see what will happen. But this rebooting of this negotiations means one thing. If you remember, this rally is based on the three driving factors, on the three whales. So first whale is a Fed policy, and this is the biggest reason for this rally. Reviewing of the Fed policy into more dovish character. Second is the tensions around Iran, and they are mostly done, and as I said, nothing will be, no hard continuation will follow. This is the second factor, but the third factor was particularly the suggested negative impact on the United States economy. So currently, as I said, this expectation of the markets that tariffs war should make a negative impact on the United States economy is not confirmed, and it mostly brings theoretical harm rather than real one. But that was the reason how it was explained by the investors why the euro shows rally. And now the third factor is mostly eliminated. Theoretically, that should push euro currency slightly lower and reestablish the dollar positions. But we will see what will happen, because this tight consolidation and the flag pattern keeps the road open to both scenarios, as to the upside breakout as to the downside breakout. Inside the pattern, we do not have clear hints in what direction market will follow, because these three high waves in a row means two things. Market is waiting and market stands in decision. So that's why it brings no clear patterns. On the 4-hour time frame chart, we also do not have any additional hints or clues to the extension of the situation. Minor Gartler's triple to sell has been formed, but it's already is done because this minor retracement takes the minimal target of this pattern, and it's not necessary that the market will follow lower. For some case, I keep the OP target at 1325 of this ABCD pattern if breakout will follow. So this, guys, actually all that we have currently. The one thing more that we could say is that actually if you calculate the number of candles in this rally, in this consolidation, they are mostly the same. And as market shows very tight small retracement, but the number of sessions that market spends here and here are the same, this works like the bullish sign. But as you understand, this is just technical issue, so it has no relation to some fundamental and news background that we will have on Monday. But from that standpoint, overall context looks more bullish rather than bearish in current moment. So what we could do with the euro is two possible decisions. If you're a conservative trader, it's better to do nothing right at the open price and wait for a breakout for some clear signs. Maybe if market will form this ABCD, hit the 1325, we will get Gartner's triple to buy. That will be quite another story. And we will be able to go long as we suggested on the last week. If we will get the upward breakout and see what will happen, that's another story. So anyway, we will get some new inputs, and we could act accordingly. That is for the conservative traders. Another solution is just keep an eye on other currencies. For example, on the Canadian dollar, we have excellent setup, so we will take a look what we have there. Take a look at the other majors. And if you will see something really more interesting and clear, more transparent situation, better to trade there than trying to gamble in what direction euro will follow. For active traders and those who prefer to trade euro currency, we could say I see only one decision. You could try to use the stop entry orders on the breakout, because inside of the flag, it's difficult to find any context for trading. But potentially our context is bullish. Based on the trend, we have good thrust. We have the bullish MACD trend on the daily, very small retracement, consolidation here. So this is possible. So if you would like to take the long position, you could place, for example, stop buy order somewhere around A point, slightly before it. And if market will start the breakout, taking out on the A, you will be in the trade. Conversely, trading short, you could, for a downward breakout, you could place stop sell order somewhere around B point. So in the case of the downward breakout, you also will be in. This is actually the only thing that I see how you could theoretically trade euro currency right now. But in general, overall setup is shows very weak context for trading. So usually we do not follow such kind of the context when we have the null patterns, when the market stands a decision, and we stand before the announcement of the major results of the J20 meetings. So you could think whether it makes sense trying to trade euro currency right at the open of the week, while closer to the end of the week we probably will get something new. In July, actually, we will have the good statistics. It will be non-farm payrolls next week. We will get the gross domestic product for the same second quarter. We will get the Fed statement, Fed meeting. So this will be a lot of shaking events ahead that probably will increase the volatility on the market and will provide enough setups for trading. So that's our view. So today, guys, our weekly report mostly is dedicated to fundamental issues rather than from technical, because from the technical point of view, as you can see, we have very few moments for discussion right now.